Welcome back, folks. Today I wanted to outline a partnership structure after setting out a sole trader structure recently. So a partnership structure, obviously, it's two individuals that come together and form a partnership in a small business. So a couple of key advantages again with the partnership structure, similar to a sole trader, is it's really low cost to set up. So again, no cost, two individuals come together with their tax file numbers. So their individual tax file numbers to create one partnership, and the partnership creates its own tax file number. So the business comes together, the partnership has a tax file number, and at the end of the year, the profit goes 50-50, 50% to this partner that goes into their individual tax return under their tax file number, and the other 50% of the profit of the business goes into the second person's individual tax return with their tax file number. But the partnership does get its own tax file number. However, extremely low or no cost for that. The other thing, like sole traders, that partnerships can do is to get a business name from the Australian Securities and Investments Commission, from ASIC, for about $80. Really simple. So the business name can come for $80. Two partners can come together, create a business, and off they go and can start trading under the partnership. Now, one of the key things about that is that being low cost, two partners come together, they can get an idea, they can get something up and going quite quickly and start trading for very low cost, and it's really good for those people. A couple of disadvantages though with a partnership structure. One clear one is that, again, like a sole trader, these two people that come together in a partnership have got unlimited liability when it comes to the business. So if that business is trading under the two partners and they get into some sort of financial trouble with creditors or some sort of legal dispute happens, the two people's individual assets are at risk. So one of the partners may have a house in their own name that becomes at risk of the business getting into legal or financial trouble. So the partners, again, big disadvantage, they have unlimited liability. So what are the key things for partnerships that come together that make things worthwhile in the business environment? Probably the main one is that when you have personal partners coming together in business, it is a very, very good structure for that small business that's growing a bit, and personal partners can come together and split the profit 50% to one partner and 50% to the other. So a really good example of this is the main working person is out working in the business, and the personal partner is at home looking after the books and the administration. Now, there might be a lot less hours involved in the administration and the bookwork of the personal partner at home. However, the tax office sees it as those personal partners coming together in a partnership, sharing the spoils, sharing the costs, and splitting the profit 50-50. So an example is a business, it turns a profit of $150,000 for the year. $75,000 comes down to the main working partner out in the field, and $75,000 comes down to the administration partner at home doing the bookkeeping and the administration, and they both then lodge a tax return under their own name for $75,000 each. And that's a big tax advantage there for personal partners coming together in a small business. Business partners who are not from the same family, it can be a really good structure, a partnership, to come together, as I mentioned earlier, with an idea. So one of the partners comes up with the idea, a mate comes along, they agree, they get stuck into it, get an ABN, get a tax file number for their partnership, and they get started. It's a great way, low cost, to start that idea, get the business up and going, and again, the profit goes 50-50 down to those partners in their individual tax returns. The key thing though in any partnership is when the business builds and the business risk goes up, or the profit goes up and the tax starts to become a burden. You need to talk to your accountant. Small business tax champions would be good. Talk to your accountant and make sure that you move from a partnership into a unit trust or a partner or a company or a family trust to run that business at the right time for asset protection and for tax minimisation for your family and potentially your partner's family. That's a partnership, folks. Really low cost, tremendous for getting started in business, getting an idea up and going. And number 3, for personal partners coming together in a small business that can go on for a long time if they've got very low business risk and they spread their tax between both personal partners, and can be a great way to keep your costs down in small business and your tax down as well. Partnerships, great little structure in the right circumstances for the right people. Come and chat to us at Paris Financial. We're the small business tax champions. See ya.